Financial technology, or fintech, is a hot area of innovation today. But while consumers may be getting used to using PayPal to pay their plumber, what about significant business transactions? Will a warehouse manager someday not only buy forklifts online with a click, but also instantly qualify for 5 or even 6 figures worth of credit to pay for them? Will China stay in the digital payment lead? Inxeption CEO Farzad Dibachi and I discussed fintech trends recently on Future Proof. There's a lot of interesting stuff being written right now about how China was so early on fintech, but the momentum has swung to the United States. So I wanted to start by asking you, do you agree with that? Do you see a momentum of energy around fintech, and how would you kind of map that universe?
So I don't see the momentum on our side yet.
Really?
Especially on the B2C side, because they literally don't. They do not. And in fact, yesterday, they introduced a digital currency to go with all the digital methods of payments. So the actual Central Bank of China is issuing digital currency. So we're a long ways as far as that's concerned. I think that we've had such a long-standing responsibility as the fiat police of the planet in terms of dollar, that we've spent so much energy on being sort of the policeman of financial transactions on the planet that we are sort of completely wrapped around that axle. Mm-hmm. So I think it's that more than anything else that is allowing China to be ahead faster, right? So I think we've got a long, long ways to go. And, if you think about your credit card, it's been maybe a year, maybe 2 years with the chips where you don't have to sign every transaction. Mm-hmm. Well, that's been going on in Europe for about 15 years, and it's been true in China the last 6 or 7 years. And before 6 or 7 years in China, they didn't have credit cards. So they went from, no credit cards to credit cards where they don't have to get a signature going. So I think we have a long ways to go. Having said that, I think there's a lot of companies with a lot of interesting ideas about how to do things differently going forward. But I appreciate too, though, a lot of this comes down to identity. Basically what's called KYC, know your customer. KYC data is much easier kept in a place like China than
it's called AKYC, already know customer.
Exactly. So they already know the customer. So it's like so life is easier that way. And even in Europe, the notions of government identity cards is not a difficult thing to fathom. Whereas in our society, that's a difficult thing to do. Mm-hmm. So I think it's early days, but I think absolutely positively the opportunity for us to innovate above and beyond what China's done is very, very high. Mm-hmm. So
what are the kind of structural things that need to happen? I mean, there's always been so much talk about the credit card companies have a sort of stranglehold on the infrastructure of credit in this country. Is that something that needs to be addressed with policy, or will the market generate enough activity and competition that it will fix it?
It's a great question. So if you think about, there was a question I was asked back in the day, probably 25 years ago, and people would ask me, who's going to win the war, the cable companies or the phone companies, right? And my answer was this. And people were always surprised. I said the number one thing about the phone company that was very unique back in the day was that they knew how to bill people. Okay? If you think about a phone companies were the only companies nationally that knew your address, knew your information, so they could bill you. Mm-hmm. And if you recall early days of internet, they were the billing centrals of all of internet. You would buy services and they would show up on your phone bill. Right? So there's two aspects to all fintech. One is know your customer. Second is how do you get charged, mm-hmm. right? Mm-hmm. The only companies that have had the infrastructure for a long time to do that are the Visa, MasterCard, American Express networks. And these networks are so expensive to put together. It takes so long to have that there's just not a new entrant every day. Mm-hmm. what you see now is, for the first time, like all of the rest of internet, actually the tribalization of that. So now you have smaller tribes. You can get smaller tribes together and do those transactions in the smaller bundles. As you tribalize it, the possibility is very high that companies like Visa and MasterCard are going to have a problem. Because you only use those because they were available in many stores. Again, if you go back in the day, there were stores that took MasterCard but wouldn't take Visa. Nowadays, you don't even think about that. Everybody takes everything, right? But as you go forward, you can see situations where a group of people would get together and allow for transactions amongst themselves outside of the Visa and MasterCard and American Express networks, because those networks are so expensive. And that's absolutely positively happening and will happen. And it's going to be a pretty massive shift from the way transactions have been done in the past to the way they'll be done in the future.
It seems pretty clear our B2B, our B2B seller customers do not want to use credit cards. They want to use many other things. What do you think are the most exciting opportunities for us in that world right now that we're working on?
The most interesting thing about us is to allow people essentially to write each other IOUs, right? Mm-hmm. So if you go back in the day, actually, there's a great story. So the Safeway department store started in early 1900s, and there were two different groups, Safeway and one other grocery store group. The other grocery store group, both of these actually came to be because they did something that was never done before. They were called cash and carry, okay? And the idea was, for the first time, you could actually pay for something in cash and then just walk out. There needed to be no connection between the buyer and the seller, okay? You just pay cash, you walk out. Before that, it was all based on put it on my tab. So Safeway came along and said, we will give you a discount if you cash and carry. So we don't have to keep track of your name, and you also don't have to tell us. So that was the basis of that business, right? So you can see now with the technology that we have is our possibility of being able to keep tabs on your expense and keep it on your tab and charging you later without having to slow down the transaction, right? The whole point of cash and carry is, hey, you pay me cash, I give you the stuff, the transaction is frictionless, it happens. Whereas if you put it on my tab, now I gotta know who you are, I gotta keep track of it, I gotta keep track of your spending limit and tell you, no, now you gotta pay because you've been too much on your tab. All of those things slowed down the transaction, right? Mm-hmm. With all that we do and the way we do things, we can actually do transactions as fast as a cash and carry, but have it be based on IOUs. Mm-hmm. So I think that will be a huge opportunity for our customers and their customers, for our commerce partners and their customers.
Plus, they threw out the baby with the bathwater, because when you got to cash and carry, you had no friction. You also had no connection. You severed the relationship in a way, right?
Exactly.
So the information that used to come in, like, hey, Joe, your kid came in and put 20 pounds of candy on your tab, you might want to look out. I mean, that stuff.
Exactly.
Right?
So the connection between the customer and the client became more tenuous and impersonal and not direct, right? So to be able to bring all of that back is a very big opportunity.
Right.
But of course, requires a lot of technology to make it as frictionless, because if you introduce a lot of friction, well, that's not gonna do it.
Right. And so in our case, it's more like, hey, do you realize you're overpaying for this mode of transportation that's not getting there any sooner than this one is, or that kind of stuff, right?
Right. You get to know your customers, and as you know them, you offer them things, which is again going back to the having a tab. You know your customer and you tell them, I know you like that brand of product. I just received that brand of product. Would you like some, right? Mm-hmm. So now you're advocating for your customers again. And ultimately, Inxeption is all about advocating for our customers. Mm-hmm. And if we know them, advocate for them, we can advocate for them very interestingly in the finance world.
That's it for today's Future Proof. Thank you for listening, and for more information, please visit us at inxeption.com.